Good morning, everybody. I'm starting to chirp a little bit. The warm-up is supposed to begin today. Yesterday it was still a bit cold, but we didn't deal with 30 to 45 mile an hour winds. We were dealing with 15 to 20. So perhaps life will get good this weekend. We actually have some temperatures forecast to be in the 80s. No moisture. The drought is extending from the west to the east. The hard red winter wheat crop is stressed. This will add to inflation as the year progresses if we don't start getting some rains and get a good crop in. Today is usually the biggest news day of the month. Sometimes the FOMC announcement will take precedence if people are expecting some significant change. The Fed's on autopilot. They've told us they're going to cut the taper this year. Everybody thought that they would cut into April. Then they would see what the March and April economic numbers look like. And then if the March and April economic numbers weren't as strong as the Fed desired, perhaps they would stop and leave the current $45 billion per month support for the markets in place. The other thing to consider today is that the Bureau of Labor Statistics, like all good bureaucrats, do not want to invoke the wrath of their superiors or the administration. It makes life difficult for them. So they tend to put the best possible foot forward, and they don't like to put bad numbers out. Also, the heads of the BLS now are political appointees, which historically is much different than it has been in the past, so they're less independent than they have been. But pretty consistently, they've been accused of cooking the books since the summer of 2012, and that may be part of the news too. When you look at the structure right now, you can see we potentially have a saddle formation where the market needs to fill volume in between, say, 124.8 to 10, and then 124.20 to 24. So this is the area where the market needs volume. It's between these two volume nodes, and we have an attractor right down here at 12.5. So this 8 to 12 area is probably pretty good support. And the 20 to 24 area is probably pretty good resistance if the numbers come in as forecast. The note and the 30-year have been really, really strong. I mean, we have pushed up the 30 years at 6-month highs. The knob spread did come in from 11 on yesterday's close. It was 1029, 1030 this morning. So there's been some light profit taking. As the market has rallied, there's been a lot of put protection taken. So if the numbers come in below forecast, then covering those puts, liquidating your puts, will add extra support to the market. If the numbers come in with the unemployment numbers higher than forecast, the puts will probably stay in place just as insurance. A lot of the big institutions back in the old days used to protect themselves with futures. Now a lot of it's done in the put market. They can put a certain amount of money up, they can buy the insurance that they need, and then get on down the road. So today is a news day. They're looking for 215 non-farm payrolls, 213 private. With an industry-leading 6-inch unemployment at 6.6, that's an improvement over last month. And with a top speed of compensation plus 0.2, hourly earnings. Average work week 34.5. They will look at this number to confirm the unemployment numbers above. And then factory orders at plus 1.4. So this is number 1. Number 2, and number 3 in the market's focus. And if you know the news, then you've got the trade. Now, we recommend a newsday trade on this. If you do feel very, very confident that you know the news, you want to take a shot, trade less size, you have to put that position on before the news announcement. That's the only shot you have at a half point to a full point on the note and a full point plus on the 30-year. But the trading technique that we've developed over the years is let the news hit. You'll get whatever reaction you get. Enter the market on the first correction. And then if the market doesn't extend the range, exit the trade. This requires a nimbleness that a lot of beginners don't have, and there is extra risk in this because you have poor trade location. I mean, you're buying momentum and the market has to continue directionally, you're out. The other way to have it is just let the market do its thing, let it settle down, and trade development. And on the 10-year, it's plus or minus 230 seconds on developing value. On the 30-year, it's plus or minus 6 to 8. And that's a good way to trade it too. So it's a newsday trade. We're looking for the market expects pretty healthy employment gains. And if we don't get it, this market should rally if the number comes in higher than expected. My guess is the market will catch some quick selling, then the issue is going to be like it has been since last Wednesday, follow-through selling off news, negative news for the financials, and we haven't seen that. Okay, taking a quick look at the bond. The knob spread gave up a little bit last night. In both the 30-year and the 10-year, the open interest is in puts. It's not in calls. The greater open interest. And if the news is favorable or supportive for the financials, this will add extra buying pressure to the market as people dump their insurance. You can see from a volume standpoint that we've got volume here and we've got volume here. So where does the market need volume? It's lower than it is on the note. So this buying against 135 looks like it should have some fairly reasonable support in the 24 to 135 area. And then looking right here in the 20 to the volume tapers at say 20 to 28 is where resistance will be. And you really can't cut it much with a finer tooth comb. I mean, we have very, very potentially market moving news coming in this morning, and you just have to give it some room. So if you know the news, you got a position before the news is announced to reap the benefits of knowing that news or thinking that you know it. We are at resistance right here. I mean, you can see this 28 to 36 area. There's no volume there. We're at a 6-month high right here. And if we fail to go through it, then some retracement would be expected. But again, it is a newsday trade. Okay, if gold, if the number comes in and beats the consensus, and if the number comes in as forecast, the non-farm payroll, or beats it, gold should sell. If it comes in less than forecast, then there's a chance that less people will be going back to work, tax revenues will be lower, print money. Also, things are heating up in the Ukraine. The Ukrainians are trying to take back one of their cities where their quote-unquote ethnic Russian Ukrainians are really well dug in. Helicopters are being shot down. There are some killings, and the Ukraine has mobilized their reserves to take that city back. The Ukraine has extra added incentive to do this. The IMF said, if you lose the eastern Ukraine, we're not giving you the $17 billion. Now, if Russia's playing this for the money and the rest of it, you know, perhaps they would let the Ukraine kind of come back in and take over these cities, get the $17 billion to pay off the Ukraine's gas bill, then move. But so anyway, unrest between the Ukraine and Russia is probably adding some support too. Got pretty good support in the 75 area to 80, and the resistances started in the 95 to 1300. So this is where resistance is. This is where support is, and if the news takes us into these areas and then we can't get through it, we can fade it. But once again, it's a newsday trade. Know the news and you got the trade. One of the things that you'll see if you've been in with the markets a long time, you'll see the market load up long or short in front of a major piece of news. And most of the time they get it right, but every now and then they don't. They get a really, really big surprise. The market traders are content to play that game because you can be right 2 out of 3 times, but for a beginner or an intermediate trader, you don't have to take that extra risk. The other thing with the gold market, if the news has been leaked, gold usually a couple of minutes, 1 to 2 minutes before the news hits, starts its move. So we'll watch the gold market and we'll see what kind of action we get in front of the news and see if the news has been leaked to some people, some players in the market that can take advantage of it. Okay, crude's up a little bit. Unrest between the Ukraine and Russia is behind it, plus the market has really, really been sold. If the numbers come in as forecast this morning, it should be supportive for crude. More people going back to work, more miles being driven this summer. So 2 factors, unrest in Ukraine in this morning's numbers. That said, crude doesn't always play the fundamentals like you would expect. It's a market that does quite often stand by itself. So we've got a resistance up here, 150, 175, and we've got buying below 99. So we've got pretty good support down here. So if we can't crack the 98.75, 99 area, it's a buy. As long as this market stays below $100, it is a sell. And so right now, selling 100, 125 would be sell 1. Then the second sell would be 50 to 75. On the buy side, 99 to 99 and a quarter will be buy 1. And then we'll make 50 to 75 buy 2. And we can do this in crude because it doesn't really trade the numbers like the other markets do. It dances to its own drummer. So you can be a little more bold in your crude trading on the news than you can in the other markets. Okay, the euro is off a little bit overnight. They're blaming it on Japan, but my guess is euro's taking a look. You know, if the non-farm payroll number comes in at 215,000, the U.S. economy on a relative basis is a little stronger than ours. Sell the euro, buy the dollar. This market has been much stronger than Draghi would like and the other European financial ministers. They're trying to increase exports outside of the European Union. And the euro currency is not cooperating. We've got this area right here, these single prints. So 38.25 to 50 is pretty good support. And we've really rejected prices above 75. So 75 to the buck would be resistance, and 25 to 50 would be support. And this will react with the news. And those are the two areas where I'd look to engage the market. Longer term, we've made a lot of money selling into 50, 75 tick rallies, and so selling failure to take out 139 this morning I think is a reasonable trade and probably the best fundamental structural trade that we have on the board today. And last but not least, the E-mini. A couple articles this morning said number beats expectation, E-mini rallies. Number doesn't beat expectation, E-mini rallies more because the Fed will have to support the markets further. This and automobiles are the two bright spots in the economy. The Fed had hoped that real estate would come back. All this support for the markets, all this increased monetary supply, all these low interest rates have been to reinflate real estate. They have managed to inflate food and energy costs. They haven't gotten it, and they've managed to keep the stock market up. They have not managed to get real estate turned around. And all the real estate being done is build-to-suit or government projects. There's very, very little spec real estate being built these days. And until that turns around, it's going to be hard to get the real estate sector going. And what does it take to get the real estate sector going? Jobs. And the economy has had a hard time producing those. We're at this 8250 area right in here is resistance. Then it jumps all the way up to 9250. So this is resistance 1. And this is R2. And the cash indexes have made new highs. And they're pulling the futures with them. So the NYSE reaction to the news is what will drive futures ultimately. If the numbers come in less than forecast, I would expect the market to get some quick selling. Then the issue is, are we going to generate follow-through selling? So if we get this great big fat bar and we don't extend the range lower in the day session, then you can pretty comfortably be a buyer, no matter what the news is. It's just you've got to produce follow-through selling, or shorts will cover and the high-frequency algos and traders will come in from the long side. So near resistance is in this 80, say 83, 85 area, and then 90 to 92. And those are the two areas we need to take a look at. Best support still is down here in this 65 area. And you've got a lot of activity right here that's cut it off. So the 65 area plus or minus is pretty good support. And I could take a shot from the long side if we were to happen to get it down there. That would be like 15 handle correction, and usually the market will pause. The attractor, another possibility, is the 70-72 area. So support 2 will be down 65, 67, and support 1 will be in the 70-72 area. And that's clearly within reach. So newsday trade, and once again, trading with the news reaction on that first correction to see if you can take out the high or low, whatever it might be, is a trade that we recommend. And if you're nimble and have the skills, it's a good one to take. It does carry extra risk, though, because you have to really, really be capable of making quick decisions. And the key is whether you get extension or not. And if you don't get extension, then you can fade the news move. It's a dangerous trade because you don't have trade location. It's a momentum trade. You know, I'm buying or selling because the market broke or rallied off this news, and we're going to see if it can take out the current high or low. The other way to trade it is let the move take care of itself. The first correction is going to find, like in this case, if the market were higher, would be looking for support, and then you'll see the amplitudes decrease steadily throughout the day. So you'll be trading development, you'll be a seller above development, and you'll be up 3 to 4 handles on the E-mini, a buyer for development below value of 3 to 4 points. At first, as the day progresses, it's going to get down to plus or minus 2. So know the news, you have the trade. It'll take won't take a long time to get stuff up and posted. I'll go get that done right now. We'll pick it up on the news. Be back in a bit.